Hey, it's Tom here and welcome back to the channel. Now, just this morning I was setting up and getting ready to film a video on the recent earnings release from a company called Thor Industries. They recently reported numbers and they smashed it out of the park, and I kind of wanted to give some of my thoughts on the results that kind of came out of that company for the quarter. But just before setting the camera up and everything, I got a text from none other than Jason Rothman at the After Dinner Investor, who actually just shared a recent interview with the CEO of Seritage Growth Properties, Andrea Olshan. So Andrea Olshan appeared on Bloomberg talking through some of the recent news around Seritage looking at strategic alternatives, potentially looking to sell the company or sell kind of certain assets. So I haven't even finished watching the interview myself kind of before hitting record on the video here. So I'm going to watch through this interview. It's 5 or 6 minutes long, and I'll kind of give you some thoughts along the way, and we'll see what Andrea Olshan had to say. So if you want to check out the full interview, that will be linked down in the description below. But without further ado, let's get straight into the video.
Seritage Growth Properties is the real estate investment trust that emerged from the bankruptcy of Sears. It's now exploring strategic alternatives, including potential deals with partners, investors, or buyers. And joining us to discuss the path ahead is Andrea Olshan, CEO and president of the company. Also with us is Bloomberg's deals reporter, Ed Hammond, which is appropriate, Andrea, because you may be, well, you're in the market, I guess, for a deal of some sort. What's your preferred exit here?
Listen, I think this is a tremendous portfolio, and there's so many different ways that this could go. We really need to look at alternatives and maximize value. Right now, where we're trading versus even the value of some of our prime assets, there's such a dislocation that it's really incumbent upon us to look at what alternatives
because property values have just skyrocketed. What do you think?
So I think this is one of the things that Seritage investors have clearly been getting at for a long time, is that there's quite the disconnect between the net asset value of Seritage and the current market price of Seritage. Sure, property prices have gone up for commercial real estate in the last year or so, but that disconnect between net asset value and current market prices really existed since kind of the pandemic started, really. The disconnect has kind of contracted and expanded to varying degrees over the past couple of years, but as it stands right now, in my view at least, that is, quite a large gap, quite a large disconnect. So increasing property values have a little bit to do with it, but it's really just a massive fall in market price that explains a lot of the difference here.
Your portfolio's worth?
So we haven't been public about it. I think a large part of our portfolio is also its potential. So, we were all Sears and Kmart's, and then what it became was a retail portfolio that still has incredible value add opportunities. We have 30 assets that are going to be multifamily developments. We have millions of square feet of entitlements for tech, office, and life sciences. So you're really looking at a forward valuation of what this portfolio could be.
Now, Andrea, obviously you announced the decision.
And again, that kind of forward-looking view is the way you have to analyze, I guess, any company, but particularly with Seritage. If you look at their financial statements right now, it's really ugly, to be frank. They've had negative cash flows for a long time. They're still going through the process of redeveloping a lot of kind of key assets, and you really have to look at the future, cash flows that some of these redeveloped properties could throw off. So you really have to be looking out the windscreen of the car as opposed to looking in your rearview mirror and kind of seeing what Seritage has done in the past. But there are ways to kind of look at the value when we don't have a huge amount of clarity on what future cash flows might be. Net asset value is a nice way to go in the meantime, but of course as the developments play out, we'll get more clarity on those future cash flows.
To go with this process or to explore these options a week ago, and in sort of normal deal land, that means everything is up for sale. Who have you attracted so far? What kind of parties are you talking to, and what kind of interest are you seeing?
It's a great question. So really, because the portfolio is so diverse, we're seeing people both look at an overall, looking at the platform, because we do have an incredible development platform, and we're able to repurpose outmoded real estate, which obviously, as we all know, there's so much of it throughout the U.S. But also people like the different portfolios, because we have sub-portfolios. So, we're seeing interest from retail operators, from life science developers, from logistics companies. So we're seeing it across the gamut.
And obviously, Eddie Lampert was the chairman of the company. He stepped down, presumably because he himself may be interested in buying this. He doesn't seem to be able to stay away from anything connected to Sears for long. What conversations have you had with him at this point around the sale?
So Eddie has always believed in the deep value of the company, and when I interviewed with him a year ago, that was something that was very, very clear. He continues to be supportive, and as he said in his 13D, he's looking to maximize shareholder value, and that's what we're all looking to do.
I'd love to get your take on Matt Winkler, our editor-in-chief emeritus, wrote an opinion piece pointing out that even though consumers right now seem deep in the dumps with regards to an outlook, inflation is scaring them, et cetera, corporate America is so optimistic. They want to hire more than they ever have before. They want to spend. CapEx projections are so high. When you have discussions with possible partners or even buyers, do you get the same sense?
Yeah, it's interesting. It depends on what type of real estate it is. So when you look at our...
But Target, for example, has come out with incredibly positive, and they're...
Don't you just love it when interviewers cut off the people they're trying to interview?
Same ballpark as you.
They're super. So our retail leasing this year has been off the charts. We have been approached. Target is one of the tenants that we speak to. They want to be larger formats. They want to be all over the country. They're looking to own their real estate. Also, all of the fast casual restaurants, even though they're on the one hand complaining that they can't find workers, they're expanding, and we're doing portfolio reviews with all of the major outparcel users. So it's really been this sort of like tale of two cities. And I think if you look at things like the multifamily portfolio that we're entitling right now, that is tremendous interest. And we were talking earlier about how so many of our properties are transit oriented, which really was discounted a few years ago. And now with rising gas prices, people are really excited about being near public transportation and in a mixed use community where they can work and live in the same environment.
We'll ask about.
Now, clearly Seritage still has a long way to go here, but in terms of, interest from some of these big retailers and so on, and some of the Seritage properties, that really flows through to a couple of different places. I guess the first place it shows up is the rent per square foot that Seritage are generating. That's been part of the story for a long time, going from $5 per square foot in annual rent from Sears when the spin-off of Seritage out of Sears kind of first happened. And those rents have re-rated up to like $20 a square foot plus in a lot of their properties. We've even seen, admittedly, some smaller properties, but we've even seen some be rented out as high as $30 a square foot or more. So when I did my valuation work and was looking at a lot of the premier development properties, obviously the rent per square foot or the market rates for rent kind of vary by state and vary by the type of real estate. But I was working off kind of $25 a square foot in some of these premier development properties, and that to a large extent I think may have even been slightly conservative, particularly in the Dallas, Texas kind of property as well. So long way to go for Seritage, but good to see there's still a lot of interest from new tenants, which will drive a lot of these development projects.
Andrew, because obviously this should be a moment when everyone is returning to the office or supposed to be returning to the office of sort of upbeatness for landlords because their space is going to be used again. But with everything that's going on with, as you talked about, the rising cost of fuel, but also the inflation pressure and everything there, I wonder how the needs of tenants are changing for you guys.
So it's interesting. We just signed a major office lease with a global tech tenant at our property at UTC in San Diego. There's a flight to quality.
So UTC in San Diego is one of the smaller premier development properties at Seritage, and it was the kind of first premier development project to come online. So they mentioned that in their last quarterly release. I think that was their Q3 earnings report that they released in about November last year. We should be getting another earnings coming out for SRG soon, so it'd be cool to get an update on that. But that is the property that Andrea Olshan is referring to here.
We just signed two major medical office uses in Aventura, Florida. Again, it's in the prime locations. They realize there's an incredible scarcity and they want to be in the right location. And I think it's also to bring people back to the office, the environment is more important. So these are properties in mixed-use environments with amenities. The retail, the restaurants are all seen as amenities, and that helps them bring their employees back to the office.
It's all about location, right? I mean, I don't want to sound too cliche,
location.
But
it's
when
true.
I think of where the Sears locations are, location, like, right outside of Bronxville, in Westchester, in the suburbs, not in downtown New York.
And size. I mean, the thing that's different about Sears and some of the other department stores that have gone out of business, our average location is over 13 acres. And because we had the auto center and the garden center and all these other components to Sears, we tend to be in the best position in the mall. We have the best visibility, the best access. So and we're self-parked. So from an autonomy perspective, people don't always understand, well, what's the interplay with the mall owner? Well, when you have 13 acres, you have enough scale to really build a sense of place regardless of what happens with the rest of the mall.
And I think that last point from Andrea Olshan is one that a lot of people miss with Seritage. I will put up maybe some like Google Earth shots or something of some of these old Sears stores and current Seritage sites, which are a really interesting kind of development prospect, because oftentimes they are kind of the Sears box in the middle of quite a big land parcel with car parks and so on all around it. So it really leaves a lot of opportunity to densify those areas and have a massive increase in the leasable area by adding to what's really just parking lots or bare land. So that is definitely an interesting part of the Seritage equation, and I think a lot of the value in that kind of extra land and that scale isn't necessarily always recognized. So again, it's probably one of the reasons why SRG are looking to go down this path of potentially selling some key assets or potentially the entire portfolio. So really interesting to see some of the thoughts here from Andrea Olshan at Seritage. She doesn't do a lot of interviews. I think this is only the second one I've probably ever seen since she's been at the helm at Seritage. There was one with, I believe it was REIT World in 2021, and then this is the only other one that I really know of besides some written articles and that sort of thing. So cool to see another interview. There were probably two key takeaways from this one for me, really. The first one is that not a whole lot was given away on the Eddie Lampert situation, and I think Eddie Lampert is genuinely still a potential candidate to be buying some of the Seritage properties or potentially the whole thing. And the other kind of key idea that I got out of this one from Andrea was that Seritage in many ways has a lot of kind of sub-portfolios. They've got 170 properties across much of the US, and they have properties that can either still be developed, or they have some that are already developed, and they cover kind of some different areas of commercial real estate as well, whether those are retail or whether those are apartments or life sciences or office or whatever. So potentially that can attract a few different types of buyers who might be interested in those different types of properties. So Seritage continues to be a really interesting one to follow. I am watching it like a hawk right now, so if there's any more major updates, I will keep these videos coming on the channel. Definitely let me know your thoughts on the whole SRG situation, and if you had any key takeaways from this interview with Andrea Olshan, the CEO at SRG. But that is it for me for this one, and I'll see you in the next video.